topics for today's webinar. It's all about asset management. What is the difference between asset management and property management? Very crucial component, and it's one of the important differentiating factors. So asset management is the oversight of the business plan and the property performance, and it's also ensuring that the property management team is upholding and executing the business plan as needed. So a way to differentiate this is, as an asset manager, you are going to work alongside and oversee what the property managers are doing at the property. So if you think about the vision of the business plan, let's say you're buying a value add apartment that needs interior unit renovations. The asset management side of things will determine how many units you're going to renovate in a month, right? It's that strategic vision and direction and business plan goal. Property management's job is to effectively turn units over, market units for rent, and get them occupied. So the property management is really the day-to-day ins and outs of managing the property, keeping up with resident requests, closing open work orders. And the asset management is the strategic high-level vision of, how many units should we turn today? What types of fixtures and finishes should we install in these units? And I'm going to pause for a second and see what question here we have. The asset manager manages the property management group or the manager at the property level. That's correct. The asset manager oversees and works alongside the property management group. And if you are using third-party property management, the typical role is the asset manager from your ownership group will work directly with the regional property manager or the person in charge from the property management company, and the property manager or the regional manager, the person in charge from your third-party company, will oversee the day-to-day of the on-site resources, whether it's a property manager, a leasing assistant, a maintenance supervisor, or a maintenance tech. So the asset manager, the regional manager, and that regional manager would oversee the on-site staff. So that's the biggest difference. And again, asset management is really the strategic direction of the business plan, and property management is really operating and managing the day-to-day residential or resident needs at the property. So how to set up a process for effectively managing assets. This is very important when you are rolling out a business plan. Again, the property management on site is only concerned or is mostly concerned with the day-to-day. Obviously, they want to make sure the business plan is upheld and the long-term goals of the property are met, but really they are trying to manage the day-to-day needs of residents and work orders and occupancy and collecting rents and paying invoices and things like that. And so the best process that we have seen for effectively managing assets, and this is an ever evolving setup as well. Typically, when you're buying a brand new property and you're getting the business plan set up, I think it's best to at least start with a minimum once a week call or Zoom meeting to have the asset manager, potentially some of the ownership group, the property manager, and the regional manager or the person in charge of the property management company all together on a call to talk about what's going on at the property, what changes have we seen happening, what direction are we going in, and to also review key performance indicators, KPIs of the property. So the on-site property manager would prepare a KPI report to send out and review with everyone on that call. Some of the KPIs for effective management are, occupancy, where you're at with collections, a rent comp analysis of the immediate surrounding properties. Another key KPI that we track very closely is the average rental rate for our assets. And the reason we track this is because the goal of most of our business plans is to increase revenue by increasing rents through value add initiatives. And so by tracking what our average rental rate is at the property, we should see it week over week increasing, whether it's by $1 or a few dollars week over week. That average rental rate should slowly be creeping up. And if it's going down, that is a good indication that something is happening at the property. And so it's a great way from an asset manager's perspective to get a snapshot and say, are we trending in the right direction? Week over week, if we're renovating units and renting them at a higher rental rate, week over week, we should be seeing that number trending upwards. And so another effective KPI, if you're managing a value add project where you're renovating units on site, you may want to track the number of units renovated, the number of renovated units leased, the number of renovated units that are rent ready but not leased yet, to track the absorption of your renovated units in the market. So for example, if you renovate 10 units in a month and 0 get occupied, maybe you're over renovating. Maybe you are trying to overprice those units. And so being able to track very closely what's going on with your business plan, again, is a strategically important factor in asset management. If you have a question, I saw a hand pop up. If you have a question, put it into the Q&A box or put it into the chat box, and I'll be happy to take questions as we go throughout this presentation. I want to make sure that, you all get exactly what you need to take your business to the next level and really elevate what you're doing. And I know, we're going to kind of scratch the surface here in this one webinar, but at the Multifamily Investor Nation Summit coming up January 21st, 22nd, 23rd, just go to I am pulling up my link here. Go to mfinsummit.com and you can get a lot more insight. We're going to have some very specific operators speaking of how they do it as well. So it'll be a good mix of, not only my opinion, our lessons learned from, nearly 3,000 doors owned, but you'll get some other great insights as well. So if there's no question or comment in the Q&A box or the chat box, I will continue with our next step, which is common roles within asset management. Okay, I'll take this question that just came in. What is the typical average percentage of rental income monthly/yearly is paid to the asset manager? So there are asset management fees and there are also property management fees. A typical rule of thumb average on a monthly basis, typically an asset management fee would be somewhere between 1% and 3% of gross income collected. And property management fees would be somewhere between 2 to 4% of monthly gross income collected for large 100-unit plus properties. The percentages may go up or double potentially, or even more than double if it is a smaller size property, just based on the uniqueness of that asset. All right, moving on to the common roles within asset management. So several roles, and I want to talk about the roles and let you all think if it is a different team member or if it's the same person. So one thing that we do within passiveinvesting.com is we go through and write down the activities that need to get done. And then we put a person's name next to those activities, because it ensures that every step gets taken care of and one person is responsible and in charge of each activity. And so within the role, I'm going to talk about each activity, and then typically, one person can handle the asset management job, but you may have different folks on your team who are a better fit for some activities versus others. But ultimately, you should have one person in charge of asset management. Like at passinvesting.com, we have a director of asset management who is in charge of everything, but pulls people in strategically when we have items to discuss. So the effective roles and activities within asset management, the first and most important piece is, monitoring the day-to-day operations at the property. So that's that KPI report that I talked about, tracking occupancy, tracking rent ready units, tracking number of tours, tracking the competition, tracking your average rental rate at the property, all of the fun property stats. The other important activities within asset management, are if you have a value add initiative, tracking the CapEx dollars, tracking your CapEx budget, tracking, number of units being renovated, tracking the pipeline of upcoming lease renewals to determine if you want to be more or less aggressive on renewing folks or really trying to push your renovated units. So that would be another key activity. The other key bucket that I'll kind of talk on is the technology component. And so I kind of bucket technology as how you're doing your marketing, how your online presence is, tracking reviews on social media, overseeing what marketing initiatives are being used for the property, whether it is, Facebook Marketplace, whether you're doing apartments.com. But, you know, it's not doing the day-to-day work. It is working alongside the property management company to make sure that they have a sound marketing plan for the property. Ultimately, the property manager is responsible for marketing the property, touring the property, showing it to prospective residents, and really doing the day-to-day activities. But as an asset manager, you want to make sure that the steps taken and the initiatives and the specials that the property management company is running are acceptable to the business plan and to the overall success of the property. And at times you may need to change things up, or have a conference call with the property management company to see what types of recommendations they see, what types of market comps they're seeing, and what other properties are doing in the area to potentially change what it is that they are doing. So let me pause for a minute and just take a couple of questions here. Property management companies should be charging 1 to 3% per month to manage. The asset management fee is typically 1 to 3% of gross income collected on a monthly basis. A property management fee would be somewhere between, I think, 2 to 4% of gross income collected on a monthly basis for the day-to-day management of the property. And that's for 100 unit plus. The rates probably get a lot higher for smaller size units that are a little bit more unique. Okay. Yes, Amanda, I did say 2 to 4% for property management on 100 units plus. That's pretty in line with the market. Of course, there are unique situations where the management fee could be higher or could be lower. That's just the typical rule of thumb. But I always recommend you at least talk to 3 to 5 different managers and get quotes from them if you're looking for management at your property. At what number of apartments should you consider having a property management company, and why? Much longer discussion, but the way running a property management company is a lot of work. It's a lot of day to day. You have to keep up with the local laws, the landlord tenant rules, and you have a lot of personnel to manage, right? Because the property management company employs all of the on-site staff. And so, if you're in the business of investing in apartments and your goal is to buy apartments for cash flow, for forced depreciation and tax advantages, you should not start a property management company. If you want to be in the business of managing properties and growing the assets under management, then maybe you consider starting a property management company. There's a lot of companies out there that have 10,000 plus units that only employ third party property management and will never get into the property management business. There's also companies with 5,000 or even 1,000 units that have their own management company. So you just have to look at your time available, evaluate the ROI and the ROT, return on investment, and return on time, and figure out what you're best suited for. Do you want to buy a large volume of apartments? Then maybe a management company would be a distraction to you at this point in time. And so you wouldn't want to go that route, but maybe you want to only manage 100 units or 1,000 units and do an incredibly great job and be super, super efficient. Then maybe you want to have a management company to do that. So it really comes down to your personal goal and what you're trying to achieve. So really think on that. Would it be possible to share any asset management resources? Carlos, I feel as though I am sharing these now. The KPI report is something that any reputable property management company will have. That's really the best thing for it. There is not an easy button. There's not a single page questionnaire that's going to give you all the answers, right? Because each property is different. You may have an issue today, and you just have to overcome that challenge. So strategic thinking and really staying in touch, open communication between the management company and the asset manager or team is the most important piece to success. And validating those KPIs on a weekly basis is really the most important resource that you can do, and spending the time to oversee it. What would be your property management team on a property for 120 units plus? It really depends on the area, the type of property that it is, what the vintage is. So you're going to probably have at least one maintenance person, but if the property was built in the 1960s, you may need two maintenance personnel on site to manage all of the things that are breaking, all of the preventative maintenance measures as well. And then you'll need at least a manager to run the property, and potentially you might need a leasing assistant if it is a high turnover area, where people are moving in and out very frequently. So I would say somewhere between 2 to 4 would be the appropriate staffing on that, but it could be different if the property is very unique. How do you actually know the property manager is doing their job? You have calls to check in on the business plan and monitor what the key objectives of the property are. Next question: asset management fee 1 to 3% of gross income collected. How many units do you recommend for an on-site property manager? It depends. Typically, I would think 100 units plus, but maybe if it's a unique property that has 50 units, maybe you'll need an on-site property manager. Um, if you're buying a Class A property in downtown San Francisco and it's only 30 units, you may have a full staff on site because you may have a package concierge person. You may have a doorman. You may have um, a receptionist to take people's phone calls, deliver packages, get groceries. So, your average apartment across the US, I would think, if it's less than 50 units, you wouldn't have anyone on site. If it's more than 50, you may consider having a person on site. And if it's over 100, you definitely probably want to have a person or two on site. As an asset owner, what KPIs or data do you wish you had to do a better job, but it's not possible to get today from your PM? I think you can get all of the data that you need to effectively oversee the asset management, and effectively manage the property with what we have. So, again, it's really defining what the business plan is for the property, and then what are the exact measures that are going to get you to that goal. So I think just think through it, have conversations with your asset manager, have conversations with your property manager, and you'll be able to figure out and have a good quality KPI report to manage and see. Yes, this recording will be shared. And last question here is, what are your thoughts on having your asset manager working for the property management group, not the ownership group? I like the separation of teams a little bit. I don't think having an independent asset manager who works for the property management company is enough checks and balances, if you will, or separation of power. And at the end of the day, you as the owner are ultimately responsible for the business plan at the property. And what I mean by that is it's the long-term vision, what the goal of the property is. You're not in the weeds on the day-to-day of, like I said, managing maintenance requests or answering resident questions. That's really property management. So I would like to see some separation in power, but unique situations come up. So it could be a perfect setup if there's a really good alignment of interest between the ownership and the property management group, if you are also hiring them to do asset management. But I probably would not do that from a personal perspective. But again, there may be a unique situation there for some folks. Good question here, TK. From an asset management perspective, how do you keep an audit on all of the monies coming in and out of the bank account? The easy answer to that one is you get copies of the bank statements on a monthly basis. So ultimately, a good property management company will open the bank account in the name of the owner of the property. So if you buy a property and you own it in 123 Main Street LLC, the bank account that the property manager should open the account in would be 123 Main Street LLC, and you would be a co-signer on that bank account, and the bank would automatically send you statements every single month of all incoming and outgoing deposits. And again, it's your responsibility to verify that all of the monies are accounted for appropriately. Well, this has been excellent. Keep any Q&A questions coming. Use that Q&A box or use the chat box. I think we covered a great deal today on asset management. We talked about the difference between asset management and property management. We talked about the fees a little bit. We talked about effectively managing your assets. We talked about the common roles. We talked about the most important KPIs that you need to receive. And with that, I feel like we covered just about everything in this webinar. We had quite a few questions. If anyone has any more questions, I am happy to address them. Again, this webinar, the reason we do these is to help all of you take your business to the next level and or buy more properties and do a better job. So, Alec, the question in here, how do you vet your property management company in selecting one? Well, the best way, like I said, interview 3 to 5 or more prospective managers. I would ask them for references of other property owners that they work for. I would interview the references and really verify, how long they've worked with the property management company. What are some of the sample reports that the property management company provides on a weekly, monthly, and annual basis, as well as quarterly. And just do your due diligence. Look at reviews online, talk to different brokers in the area, see who they recommend. Again, this one, there's no easy button. Make phone calls, talk to people, verify. Can you briefly state the KPIs to include in the report? All right, here's a quick list of some of them. You want occupancy, you want current collections for the month, you want to see the average rental rate at the property, you probably want to see the 3 nearest comps, and if they're offering specials, concessions, what their 1, 2, and 3 bedroom rents are, just so you know where your comps are at. You want to know the number of tours that you had in the last week. You want to know the number of leases that were signed. You want to know if there's any current specials being offered, number of maintenance tickets that came in, number of open maintenance tickets. Typically, maintenance requests should be closed in 24 to 48 hours. So there should not be a huge volume of open maintenance requests for the property. And I'm trying to think of other key, another key metric is vacant units that are rent ready. Again, you don't want down units sitting at the property that are not ready to be leased. So any unit that is vacant should be in a rent ready condition, and the management company is actively marketing and trying to rent those units. What certifications or education requirements should you have when hiring an asset manager? What does a good asset manager resume look like? Where would you find one? Well, I would start with the resume. Ideally, you want them to have asset management experience, right? Working for someone else, maybe property management experience, and maybe that they actually own rental properties themselves. And so they know how to do it, but maybe you're hiring them to do it on a bigger scale. So, certs or education, I don't think those are really necessary. The most important part to effective management is just knowing how properties operate. And so if they have previously worked for a management company, if they own rental properties personally, if they have existing asset management experience, I think that's where I would look. It's not a role that you really want to train from the ground up. It certainly could be, but I would want at a minimum some complementary experience to asset management, where they can start on day one and know what they're doing and do a good job. Where to find one? I would network. You could also use LinkedIn, post on job boards. I would really consider, trying to get 50 resumes. Maybe you interview 10 people, you follow up, interview 5 of them, and you hire one. So I would really spend time getting a quality, high qualified person. When do you start interviewing PM companies, before or after you go under contract? I would do it well before you go under contract. Ideally, you want the property management company that you are going to hire and work with to tour the asset with you before you buy it. And that way they can get a feel for what is going on at the property. Maybe they have more experience running these types of assets than you personally do. So it's a great way to utilize their experience, their expertise. They may see things differently at the property, which could be great ways to minimize, or avoid major pitfalls if they can see it before you buy it. So interview them early on in the process. I talked about the resume of a property, or excuse me, of an asset manager. So I'm going to just kind of leave that question, the difference between a good and a bad. And the last thing I have here for us, if no one has any more questions, I've got the next webinar. I am sharing my screen now with the next upcoming webinar. It's going to be how to set up your self-directed IRAs, or SD IRA, SD IRAs, and 401ks to accelerate and build your multifamily portfolio. So for those of you who may not know this, you can invest in multifamily assets. You can invest in private opportunities using your self-directed IRA or 401k funds. And so we're going to go through that process next week, Tuesday, December 22nd, 11 a.m. Eastern. Thank you, everyone, for being here. Carlos, I appreciate it. I'm glad the info was helpful for you today. Again, next week's webinar, I'm going to share the link in the chat box. So bear with me one moment while I do that here is the link to next week webinar. You can register using the link that I just put out in the chat box. And also don't forget the Multifamily Investor Nation Summit is coming up January 21st through the 23rd. Just go to mfinsummit.com. You can buy your ticket there. It is in the chat box for you. Thank you, Melissa, for supporting me on this webinar. She is one of our excellent team members with us at passiveinvesting.com. So grateful to have her with us here, making sure my technology works. So I really appreciate that. And thank you to all of you. Have a great rest of the day. Let me just review these questions. The webinar next week is at 11 a.m. Eastern. Melissa, if I got that wrong, please correct me. But next week, Tuesday, December 22nd at 11 a.m. Eastern. And we are good to go. 11 a.m. is the correct time for next week's webinar, Eastern Standard Time Zone. So we will catch all of you at that one. And don't forget, buy your ticket for the upcoming summit. You are definitely going to learn great things that will take your business to the next level, mfinsummit.com. And the recording will be available. Kevin, don't worry that you couldn't make the whole call. That will go out and you will be able to watch the whole thing. It'll be sent out later today. So with that, thank you, everyone. Have a great rest of the day, and we will catch you next week. And we'll catch you at the summit. Don't forget, buy your ticket, mfinsummit.com. Take care, everyone.